A lot of people questioning now whether the Fed is going to be debating monetary policy or whether we're kind of locked in for the rest of the year. The Fed has said, and Jay Powell has said, 50 basis points at the next couple of meetings. Would you anticipate something like that running through December?
Well, we've been discussing the state of the economy and inflationary pressures for quite some time, and the committee has definitely coalesced around, moving off the effective lower bound. We've already, begun doing that, and as Chair Powell said, we're going to be moving expeditiously towards something much more like a neutral Fed funds rate. My own assessment of neutral is in the 2.25% to 2.5% range for the federal funds rate. As the chair has said, we just did 50, and 50s are on the table for some period of time. I would expect by the end of this year, it could be quite likely that we were at a neutral setting, and I think we would be very well positioned to address the future inflationary pressures of 2023. I'm expecting things to improve from the very high inflation that we're having, but I do think that it's going to take us some time to take care of this.
Do you see any probability or possibility or reason that a 75 basis point move would come to the table?
Well, I think it's very useful to front load our policy settings at the moment. We did 50 at our last meeting, and it's extremely likely that 50 at the next meeting, and probably thereafter. It's once we get to a good setting for the funds rate when we can sort of after that do a more measured pace of increases, say 25 basis points at each meeting after that. I think that would be a nice shallow path that would give us time to assess the incoming data and know exactly what we're facing. So if we do a little bit more sooner, then we can get to that point where we can do the shallow path, or maybe we take 50s a little bit longer. But like I say, I think something like neutral by the end of the year, whether or not you get there sooner or earlier, is not that critical. It's being well positioned to address the problems that we expect to face in 2023. That's my first concern.
How far above neutral do you think you may have to go to get the results you want?
It's a hard question. Nobody reports what the neutral setting of the Fed funds rate is. It moves around over time. It depends on whether or not we've got tailwinds at our back or headwinds that we're facing. And so I think we're going to be feeling our way around that. Like I say, I've got a benchmark of what I think. And so if we go beyond that, if we go 50 basis points beyond that, 75 basis points beyond that, then that restrictive setting of policy should be working to bring inflation down. We don't have to constantly increase the funds rate to be restrictive. We can get to a restrictive setting and sit there for a while. Maybe we sit there longer at a less restrictive setting, and it takes a little bit longer for inflation to come down. But there are many special factors that have led to the very, very high inflation rate that we're facing. And so I'm hopeful that in 2023 we're going to be facing core PCE under 3%.